as a currency trader, huh? Another day at the office? Isn't this like the best lifestyle ever? Whoop, whoop. It's hanging out. Yeah, so we're right in the middle of the trading day. 7:30 a.m. New York time. London lunch. Good time for us to get together as a community here at Forex.Today to see what has happened, prepare for what is about to. It's the Wednesday before non-farm payrolls. That means it's a day for another dumb prediction, otherwise known as the ADP, another dumb prediction report. Yeah, so we'll scalp that, whatever. Yeah, it'll be good. Yeah, we'll scalp it. We'll make some pips. And then we'll get ready for, I guess, non-farm payrolls, right? Seems like a long ways off. We'll go through some of your trade plans. We'll go through some of my trade plans. I think we should start with the fundies and have another fantastic trading day, huh? Life is good. Life is grand. Life is beautiful. We have lots to be thankful for, and I'm primarily thankful for you being on my team and seeing you here every single day. Thank you for that. I really appreciate working with you. Best time of the day, I think. So thanks for being here. Let's go. Nick says you get social contempt. Do you? Yeah, I'm sure you do. I guess it depends who your friends are. I remember I was in South Africa and hanging out with Ryan for a bit, and he's like, "Yeah, so tell me about your buddies. What do your friends do for a living?" I thought about it. I'm like, they don't have jobs. They don't go anywhere. I'm like, let's see. Well, my one friend, all right, no, he doesn't have a job. And then my other friend, no, he doesn't have a job. And then the other guy over there, you know what, he doesn't have a job either. But, they come over to my house at like 11 o'clock in the morning on a Wednesday and we'll smoke a cigar. And then I'm like, oh, that's right. I do have a friend. He has a job and he goes to work every day. He commutes. So, yeah, so no social contempt in my neighborhood, I guess. But it was funny. I'd never, but he asked, and I'm like, oh, yeah, that's right. None of my friends have jobs. Yeah. Yeah, it sounds like a horrible life, right? Well, anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, so please always stay small, stay humble, focus on the long term, and never miss money you cannot afford to lose. I remember I was hanging out with a newer neighbor, and he's like, oh, what do you do? Oh, I'm a foreign exchange trader. And he asked a ton of questions. And turns out he's like the preeminent, what do you call it, cardiologist in our state. So he saves people's lives by cleaning up their hearts for them, like a plumber. When I save people's lives by helping them make money, whatever. But he has to have a job, He has to work weekends. What a loser. All right, hey, my name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay.com. We're a broker. That means you click a little button, let's say on your MT4 account, and pow! We enter it into the market very, very quickly with low spreads. If you're an ECN, then low commissions. You can have, you can also choose variable spreads and fixed spreads. So let's say you like fixed spreads for scalping and variable spreads for swing trading. It's all good, my friend. We got what you need, bro. So why don't you swing on by TradersWay.com, open up a trading account. Start small, just put in $1 million. And then when you start to feel comfortable and you've tested out our execution and stuff, you know, put some real money in. You know what I mean? Just take it easy. We do these sessions every single day, 7:30 in the morning, New York time, which is approximately London lunch. We do it here at 7:30, Monday through Thursday at Forex.Today, and every Friday at FXStreet.com at 7:30 in the morning, just to keep it nice and easy. By the way, this Friday is non-farm payrolls. You're welcome to join me and 6 or 7 or 800 of my closest Forex trading friends. And it's a special event. It's the biggest event at FXStreet.com, which is really cool. And the price for that event is zero, except maybe respect and hopefully some loyalty. And I've been doing that for, what, almost 11 years now? Yeah, 7:30 New York time, Paulie, on Friday. 7:30, every single day, 7:30. So I'm trying to tell you, the slide says 7:30, Monday through Thursday for TradersWay clients, and every Friday at FX Street. Yeah, yeah. And then, of course, it's released at 8:30. And then the stock market opens at 9:30. And, you know, I go all the way to 10:30 because I'm crazy like that. Okay. This is where we left off yesterday. How did it work out? Remember, I tried to draw the future before any of it happened. We were here 24 hours ago, so I said up for a while, then down, and then back into this area, and then back down. What do you think? Okay, moderate, A, B, C, D, F. It's not bad, right? It's not a call though, right, Brooke? Really, it's just we're discussing how price action is likely to react. Also, this might have been part of that conversation that we talked about where traders put their stops. And it's like, I don't know for scientific fact where they are, but I know the rules of the game. So I know where you will probably put your stop if you know how to play the game. But, right? Yeah, sure. Yeah. Question here, Richard asked, do I use the Dixie? Sure. There's two Dixies out there. There's the weighted dollar index, and then there's the non-weighted dollar index. Prefer the non-weighted because the traditional dollar index, you know, that's been around 25 or 30 years, there's too much euro, for example. There's not enough CAD, all that kind of stuff. Ruka wants to know the difference. Well, one is weighted and the other one is not weighted. Okay, so what does that mean? So whenever the dollar index first came out as a futures thing, I don't know, let's say 30 years ago, some guys said, well, let's put a lot of Deutschmarks in there and some Japanese yen and put in some British pound and some Canadian dollar and some Aussie dollar. Maybe they don't even put New Zealand dollar at all. And they decided, well, let's put more British pound, more Deutschmarks. Of course, now Deutschmarks are now euro. But let's just sprinkle in a little bit of CAD, a little bit of Aussie. And they weighted different currencies more than others. You see what I mean? And I find there's just way, way, way too many euros, which means if the euro dollar goes up, Dixie goes down. If the euro dollar goes down, Dixie goes up. And it's just simply because of the euro dollar, the euro. You see what I mean? So I'm like, well, that doesn't help me. I have a euro dollar. Why do I need another euro dollar and call it dollar index instead, right? So FXCM recently, maybe, I don't know, 5 years ago. I can't remember. It could have been 8 years ago. I don't know. I've been here that long. They worked out a deal when they were doing a lot of business development stuff with Reuters and CNBC and somebody else. They all got together and they wanted to have an FXCM product they could basically advertise through advertorial, so it's not really an advertisement. But FXCM, I think, paid CNBC money to talk about the FXCM, Dow Jones, Reuters dollar index. And they couldn't use the same dollar index because that already had a name. So they called it like the FXCM, Dow Jones Industrial Average, sponsored by Reuters dollar index. And of course, they, instead of having it weighted, they had it non-weighted. So there was just as many CAD as there was euro. But it was really, I think, all they wanted to do was talk about the FXCM dollar index on television. And you see, and it was an ad, but it wasn't an ad. An advertorial. Okay. So anyways, hang on. So, did you get the Japanese news yesterday? Industrial production came out 0.0. Yeah. How'd you like to be the guy that calculates that? You only have a month to calculate 0.0. Yeah, sure, Miles. You know me, I like to give long answers to things, but you know, I'm the type of guy that I don't like memorizing. In fact, I can't memorize. I'm just not a memorizer. But I like to understand. So that's sort of like the historical perspective of where it came from. So now you understand. This is much better. All right. So, anyways, industrial production out of Japan 0.0. By the way, that's not good. No change from June to July. But how about in the context of year over year? Right? 3.8%. So let's just call it 4%. 4% worse than last year. Say what? You know what I mean? Say what? 4% worse than last year. Was last year Ripper awesome? Right? Oy vey. So, yeah, wah, wah, wah. But I'll tell you what, it helped my yen pairs. Me so happy. Me so happy. All right. We also had some Kiwi news. And yeah, it's better. You know, it was all right. Which helped my Kiwi long. Good. 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 Oh, you know what I forgot to say already, and maybe, you know, I just take it for granted. You should know these things. You should trade Canadian dollar today, and you should trade oil today. But you should know that already. Right? Come on. There's a buildup in the API oil inventories, that's all. And I'm looking at the Chinese yuan, weakest midpoint since July 20th. Uh-huh. See, I guess that's all we need to talk about the Asian session. And then let me update you on what happened in the European session fundamentally. German retail sales, much better than expected, month over month, but very bad year over year. There's probably a blip in there somewhere, you know, pre-Brexit, post-Brexit, all kinds of stuff. course, year over year, the euro's weaker. Not terribly, right? UK housing prices up 0.5%, up 5.6 year over year. That's a nice surprise, right? Swiss consumption better than expected. French CPI, wah, 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 0.3. Year over year, 0.2%. 0.2. They want 2.0, not 0.2. There's a big difference, right? French consumer spending, negative 0.2. Say, what? And how about this, year over year? Somebody was talking 1.1%, but they only got half of that, less than half of that. Wow, big misses out of France. German unemployment, negative 7K. The official unemployment rate in Germany, 6.1. All right, well, fine. Yeah, the European mindset is sometimes bewildering to me. I can never figure it out. And it's funny because it's just how the brain has been wired. The unemployment change. They're not counting jobs, they're counting how many jobs haven't been lost. Or how many jobs have been lost. Vive la France! Yeah, thanks, Banks. But yeah, like it's funny. I just to me it's like a double negative, or I just don't think that way. So it's funny how I always trip on it. I'm like, all right, they're counting how many jobs they had lost, and that must have something to do with socialist big dogism, right? It's like not how many jobs you've gained, it's how many jobs you've lost. How quickly are we not working? You're very quickly not working. So it's just funny. Huh? It's just the other way of reporting it. It's fine. Nothing wrong with it. But it's closer to Marxism than capitalism. I think just the mindset, right? If you don't complain, no one cares about you. Yeah, okay. So the unemployment rate in Italy. Hey, there's some good news in Italy. Only 11.4% unemployment. Good job. Yeah. That's better than expected. Cool. Eurozone unemployment rate 10.1. Wow. CPI 0.8 year over year. That's just not good enough. Like I said, I don't know. I think they're going to need the United States to raise interest rates. They just don't have enough bonds to buy it to weaken things further, huh? And then blah 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 blah. So what's coming up today? ADP. That's the scalp. Chicago PMI at 945. Who cares? Home sales. Well, the Case Shiller was fairly disappointing yesterday, right? So we need see some better numbers. These pending home sales, and that's a big one because the deals haven't closed, but the contracts have been signed, right? So that we kind of want to see that. Canadian GDP. Do you think that'll move the CAD? Yeah, well, we're already trading CAD today, right? But like, why would it not be important, right, Miles? So you can take almost, the vast majority of your economic indicators are subcomponents of GDP. So we're really looking at all those things. GDP doesn't necessarily directly account for inflation. So if you're trying to track the Fed, you're going to look at subcomponents of GDP plus inflation. So do we have inflation right now in the United States? Oh, so you open up a chart and you trade your plan. Days are going to work better than others. It's going to move more today than other days. Well, I know. I thought they already basically did all that. Now it's just dog and pony show. Okay, so we're talking about inflation. Okay, so you would say no reason to raise interest rates in that case, looking at backward data, right? All right, so did we? So let's look at December's meeting, last December's meeting, and they talked about inflation over the course of the year. What major trends happened last year? Oil dropped from 100 down to 25, for example. Also, the dollar increased in value by a bajillion percent. Yeah, let's not talk about all those other things. We're talking about the U.S. economy. The dollar got ripper strong, right? And oil got ripper weak. Those are, I would say, the two biggest things that occurred, right? Okay, does a strong dollar create inflation or dampen inflation? Dampen. Dampen. Let's put it this way. When the dollar gets strong, right? If the dollar is stronger today than it used to be, then I don't need so many dollars to buy stuff. You see what I mean? My dollar has a greater purchasing power. So if last year $1 could buy 5 gumballs, maybe this year $1 buys 6 gumballs. Or, to say differently, the 5 gumballs only cost 80 cents this year. You see what I mean? So if last year 5 gumballs cost $1 and this year 5 gumballs cost 80 cents, did prices go up or go down? Down. So that's deflation. Or actually, the purchasing power of $1 has increased, and really gumballs haven't changed. The dollar changed, not the gumballs. You see what I mean? So the stronger dollar lowers inflation. And then what about falling oil prices? Will that raise inflation levels in an economy or lower inflation levels in an economy? Then keep in mind it dropped by 75%. So it's lower. All right, but last year the Fed raised interest rates, but they said these things were major concerns, right? So what's going to happen in December when we relook at these numbers? December this year, the December that hasn't happened yet. Because remember, a lot of people right now are saying, well, there's no reason in the world for the Fed to raise interest rates. And that might be true now. So think of it. In December, we'll get new data, and let's say the economy hasn't changed at all. And it hasn't changed that much, has it? Right? The average person's not a hell of a lot better off than a year ago. But did oil prices drop by 75%? What happened? They doubled from 25 to 50. So 100% increase in oil prices. Is that inflationary or deflationary? Inflationary. And did the dollar get ripper strong this year, or did it simply move sideways? In fact, weren't we at some point like down at like 105 on the euro? 105? Isn't that where we used to be? 105, 106? Well, today we're at like 112, 113, 114, right? So did the dollar gain strength this year, or in fact lose? All right, so a weakening dollar, and that's because the Fed hasn't raised interest rates, is that inflationary or deflationary? So these people that are talking and talking and talking, and they're like, oh, there's no reason for the Fed to raise interest rates. Look, there's no inflation. It's like they don't know how to think. It's like, they're just like in the moment. They don't know how to do the calculations, right? They're like a dog in a moment. You want to go for a walk? Yeah. Let's go for a walk. Let's go for a walk. Let's go to squirrel. Squirrel? Oh, yeah. Let's go for a walk. I'm good for a walk like me. I'm going for a walk. I'm going for a walk. Yeah. Right? And that's it. There's no plan. There's no strategy. There's no thought. There's no tomorrow or next month or next quarter. But it seems to me if oil prices have doubled and the dollar is weakened, and we're changing the year-over-year numbers from something. So last year you could define as a big crash in inflation. Well, just moving sideways this year is going to be inflationary compared to last year's deflationary scenario. You see what I mean? And all of a sudden they're like, oh my God, listen. Now, we were looking at the same sort of scenario to come out of the UK, except they decided to like screw up their own economy. Well, good job, UK. But at least you don't have like Germany messing around with Apple in Ireland. Isn't that strange? All right, EU, I guess you want Apple to leave. Great. That's probably why the UK wanted out. Just nonsense like that. So anyways, there's a little discussion about fundamentals. I think that's enough, right? Chilean unemployment, 7.1. Brazilian GDP, negative 3.8. Brazil has a negative 4% GDP. Wow. But if you analyze GDP over 4 quarters, which is just a different way to calculate it, it's 5%, negative 5%. Wow. South African July trade balance, 5.2 billion. 8 was expected. Exports are down 9%. What? South Africa? What do you mean your exports are down 9% month over month? What are you doing? Right? 9%? That's a lot. You know? I bought ostrich eggs, right? I bought jewelry made out of little safety pins and little beads, right? I bought little drink holders, little tags that go on your cocktail glasses, and one's an elephant, and one's a zebra, and one's a tiger, and one's a giraffe. Bought some of those, trying to boom, keep the economy afloat. Yeah, Nigerian recession, huh? How could you possibly be in recession if you're Nigeria? Well, we're not doing anything. We only had $100 billion in oil to live on. But how do you only live on $100 billion when you do nothing? You should still live pretty good. I can get by on $100 billion. Right? It's I don't know. It's an interesting philosophical question on how the world should be run, because there is no doubt capitalists are also pig dogs, where you have some people in the economy, their owners, and everyone else are workers. And I guess any economy is like that, right? In a capitalist economy, the owners take the risk, and so they get to keep the vast majority of the reward. And you throw in a government in there to try to balance, right? To keep striking, or from the capitalist pig dogs from taking advantage of everybody. And there's different ways of trying to do this, right? To manage the economy. And right now, it seems that sort of the free man version of the world seems to be working best, but it's still not perfect, right? There's still imbalances where there are some people that just make way too much money, and there's a lot of people that struggle to get by. But then, you look at how some parts of the world have decided to run their societies. A place like Venezuela or Nigeria, for example, and they have this money coming from oil, and they may not even be producing oil themselves. They just let other people come in and do the work, and they get the money. All right, cool. Right? In the United States, in the 1940s, and more importantly, more like 1950s and 1960s, they decided to manage their society by creating welfare, which is very similar to just living off oil revenue. And it's been horrible for society. All those societies, including the society, welfare is not beneficial for those who are on welfare. Because what happens is then you never get off welfare. And eventually what happens is, a Marxist may have discovered, because the idea is that, all right, wouldn't it be nice just to share all resources equally? Sounds really nice. Maybe if you have a 25 person economy, not a 25 million or 250 million person economy. But at some point it fails, and what happens is everybody loses equally. And if you want to win, then it comes down to power, and now you're fighting over power and struggling over power. You either run the country like a thug or you become a thug, right? And that's not a good way either. So we haven't really found the perfect balance, right? But I'm about to write a paper that talks about the key to society should be opportunity. Not equality. Not equality. Not everybody's equal. Everyone should have equal opportunity. As long as you have the opportunity to stand up and be awesome, right? You're not born awesome. Not, yeah, we'll see. So anyways, how do we get over there? Anyways, down, 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 up, up, down, 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 up, down, 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 down. So that's Euro USD. And then you can see there's smaller levels of this, and we call this fractals, where that same pattern, and remember we were predicting the future, so got fairly lucky. These are bigger swings. This one didn't quite happen, but again, I didn't know what was going to happen during the New York session. Looks like it went down a little more. Great. Okay, but what's happened today? Up, down, up. Okay. And this is this zone that we talked about, New York, yesterday. Okay. And then it acts. Okay, you see how important it was yesterday? And then look. The day ended. And what happens next? What happens when the day ends? People go home. Yeah, Fred says apply your idea to football players making $100 million. Well, Fred, stop going to the games. And then what will happen is eventually prices will fall in ticket sales because people refuse to pay the amount of money they pay. And therefore, there won't be any revenue to pay some guy $100 million to kick a ball, run around, right? And then fall down. Oh, you touched me. Oh, you touched me. You're not supposed to touch me. So anyways. So, all right. So here at the end of the day, people pack up and go home. No new money entering the market, right? Here's a little Asia Open, right? That's the Shanghai. Great, great, great. And then here we are, London Open. And we're back to this area, right? And we're just starting this process over again. This process that occurred, you could describe yesterday as down. So today, there's a high probability that the weather won't change too much. If yesterday was partly cloudy, today will probably be partly cloudy. Or mostly sunny, or mostly cloudy. But not dramatically too different, right? And then you get this other idea. So down, 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 down. What's followed by a down, 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 down? Up, up. Followed by down, 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 down. Do we know, as picking up from yesterday's conversation, do we know if that, based on scientific facts, that it is indeed going to go down? Lower low? No. Okay? No. Not at all. So you better make a decision. You can't sit there biting on your fingernails. Oh, I don't know. I don't know. It might go up. It might go down. It might go up. It might go down. Hell no. Do you know why? See, there's a difference. When you have a bias, you already know. And so until you develop a bias, you don't know where it's going to go. And I wouldn't want to trade like that. It'd just be frightening all the time. It's like my dog. Every time there's thunder in the sky, she freaks out. It must be horribly scary not to understand. You know what I mean? To just not understand must be a horrible, scary experience. So trading without a bias must just be horrible. I don't know why you do it. Okay? So if I say I'm a bull on the US dollar and I'm a bear on the euro and the euro dollar is going to fall, then I know. And it's not scary anymore. This is going down. What is the problem? Oh, what's the problem? You see? Yeah, by the way, Ryan, did you sleep in the bathtub last night? Yeah. Yeah, and he's washing Banks' car. That's great. Yeah, Ryan said to me, if I ever trade like this again, you should, like, kill me. Like, you're so dramatic. Or fire me or something. I'm like, you're so dramatic. Why don't you just sleep in the bathtub? Oh, yeah, that's a good idea, too. But anyways, look, have a bias, guys, because then you know. You know it's going to make a lower low. And of course, if you're a bear and you sell here and it pops up, you still know, but your knowledge now is like, holy crap, I'm wrong, and you get out. Okay? But this idea of like, oh, now you should be long, and then, oh, now you should be short, oh, now it's long, and you know, your charts are not going to give you too many answers. You're right. You need to have, you're the one that has the answers. So, you know, here's what the trade is today, guys. Okay? This is all it is, guys. Okay? All right? It's all it is. Yesterday's high. Oh, man, I missed it. ADP 177, but about as expected. Man, you guys didn't even you didn't even give me a heads up. Oh, Artem, I guess, did. 177 better than expected, but not too much. So this clears the way for dollar strength. It's not amazing, but I'll tell you what. You know what the really good news is? Last month we got 179, which is about the same as this month, but they revised it up from 179 to 194. So the market can do whatever it wants, but that news should not prevent it from moving down. Thank you, Austin. Thank you, Artem. Small businesses, 63,000. Medium businesses, 44,000. That's actually disappointment. Large businesses, 70, which is funny because what they've really done is just stole from the medium businesses. So it all worked out on average. Construction lost 2,000 jobs. Manufacturing, 0. Services, wow. Service sector on fire. Nice. Holy smokes. 79th month in a row of increases in the service sector. Good job. The American job machine continues to hum along, says Moody's. Job creation remains strong, with most industries and companies of all sizes adding solidly to their payrolls. The U.S. economy will soon be at full employment. Thank you, Mark Zandi, Chief Economist of Moody's. Yeah, that's a pretty decent one. We're going to follow this up now with CAD GDP. My worry with on the short term, is that the USD CAD is at the weekly pivot profit zone, but the CAD GDP is probably going to come out bad. So that would say up, wouldn't it? So where are we going to do? Monthly R1? That's a long ways up there, so maybe. All right, so let me go back, and then we'll go forward. Okay. Yesterday's high, yesterday's low, right? Yesterday's close. What's the sentiment? Pacini says Canada has serious problems, in his humble opinion. You know what? I would disagree with that. I would say there are economic and more importantly commodity drags to their economy, but they don't have serious problems. Their economy is actually quite well made or managed. They have very good infrastructure, right? Yeah, and not compared to Italy, right? No. I'd say like you compare Canada to Italy, and Canada is light years ahead, right? So the price of commodities are a drag to their economy, but no, Canada itself does not have serious problems. I'll give you an example, two examples. One, their economy never really was in the great global financial crisis, right? And two, when that all was dealt with, they took the central banker of Canada, Mark Carney, put him in charge of the Bank of England. That's pretty hardcore awesome. So, Canada is good. All right, so going back to this, what is the sentiment? The sentiment here, and sentiment, the definition could be like, how does the market feel? Right? How does the market feel? Well, it started the day here. The low of the day is here, so we know the market fell. But it could have started here, right? Fallen down and ended up here. And it could have closed here, right? It could have closed near the high. Well, that would say, well, the day started out terribly bearish, but ended the day terribly bullish. You see what I mean? So we have a high here, which is just a technical point, a low here, which is just a technical point, but it closed at the low. So at the end of the day, the market was very bearish. So one could assume today could be bearish too. Whatever created the bearishness may be a trend. Right? So how do you trade a trend? Well, another couple, there's three lines here that I use. This is the 382. The 50% is right on this red area. And this right here is the 618. Combine them together, and I call this the sweet spot. Then you look at this low here, which we did yesterday, remember, predicting the future, and it turned out that that was the high in London. So if you were simply bearish, that money is so easy that the fish are jumping into your canoe. Do you understand? And then the follow-up is this one. $618 Fibonacci retracement, right? Sell the sweet spot, the 382 to 618 Fibonacci retracement. Okay. And now I have to update my chart, and I want to look at this area sometime in the future. Okay. Miles talks about Carney at the Bank of England. And the Bank of England has a tradition of having foreigners involved in their process. What a mess! There's fish everywhere, right, Russ? Rainbow trout for everybody tonight. I am here with you, although we're far apart. You're always in my heart. So in a situation like this, I'd want it to drop first, but my spidey senses are tingling and telling me that it probably won't. So we have a strong US dollar, and I doubt the Canadian news will be ripper awesome. So most likely we're just going to explode above this into the monthlies, not pivots. You can see how bullish this is at the moment because we're so far above the sweet spot. You see it there? That's where I would want to buy if I were a bull. Never really got the opportunity, right? So typically, you know, I would look at something like this. Just a reprise. And then I would assume that this, I would assume that this area here would be what gives me the opportunity. So really it looks like maybe I get to buy it tomorrow. Yeah, could you buy it at the 1 hour 21? Yeah, but when are you going to get that? Again, and that'd be like tomorrow. So that tells me you want to buy it around 31. What? On wait. Yeah, you could try it around 31, right? Gorilla says prefer to sell at 31.50, and yeah, and I probably wouldn't want to even consider selling it. I want to see oil down to like 40 before I want to start buying CAD. At least 42. We're only at what, 45? 45.80. Yeah, so we got at least 3 three more dollars to go. Thank you, Austin and Artem. Is that right, DJ? Sweet, thank you. Okay. So Gorilla is trading purely technically, but I prefer your analysis to be filtered through some fundamentals. Right. The only way otherwise is to like trade it very, very short term scalp off of this. Oops. And you're picking up crumbs by standing in front of a freight train. Right? Picking up nickels that children have left on the tracks of except there's a train coming. You know, I don't know, just probably not worth the nickel. And then, of course, once this is done, I want you to start looking for tomorrow's trades, guys. Tomorrow. That's what you should be doing. Looking for tomorrow's trades. So like that euro dollar setup I gave you yesterday, do you understand that that should have been your trade for today? But we did it yesterday.
Now 40 seconds now to the Canadian data. We're going to get June month-over-month GDP expected 0.4%, year-over-year 1% on a quarterly basis, annualized expected down 1.5%.
This is TradeTheNews.com.
20 seconds. Five seconds to Canadian GDP. Plus 0.26%, 2/10 higher than expected. Of year-over-year 1.1%, 1/10 higher than expected, but annualized minus 1.6%, 1/10 weaker than expected. Again, 0.6%, 2/10 higher than expected month-over-month growth in Canada. Dollar CAD 131.05, giving back a portion of the day's gains.
So, is it just stall this out at these weekly pivots? Almost over here, if you can see the webcam, I'm looking at CAD yen as comparison to what we're looking at on the screen, which is CAD dollar or dollar CAD. CAD yen a little down, a little up. It's not horrible news. It's fairly okay news. So you could try picking up a kitty CAD yen if you're looking for another reason to go long. I don't know how many CAD yen longs you already have. Okay. All of these are pullbacks that you could be catching, right? You are not alone. I am here with you. Though you're far apart, you're always in my heart. You are not alone. Okay. And where are the bears now? Give you a hint. We talked about it yesterday. The bears are in here. And where are their stops? Here. Okay. Okay, so if you're a bull, this might be your opportunity. Yeah, it might come down, crashing around downtown. Yeah, totally could. That's why they invented stop losses. Right? No, it's not bad GDP. It's 0.6 versus 0.4. Year over year, it's 1.1 versus 1.0. There's nothing bad about it at all. Just, it's not good. It's just not bad either. Okay? There's just a lot coming off of those pivots. Here it is, right? Weekly, I'm of the range to you. You know what I'm looking forward to tomorrow is new monthly pivot points. Isn't that nice? Yes, you can. You can guesstimate. So, new chart, CAD yen, template, scan. Great. Insert, indicators, custom, boom. Hourly, false. 4 hour, false. Daily, false. Weekly, false. Monthly, true. Yearly, false. Pivot point average, false. Predictive pivot, true. Okay, there it is. Here's the current monthly central. Here's next month's monthly central. I have mine are 78.15. 78.14. Yeah, I'm good with that. Right? Yeah, I'm good with that. 7.14. It's actually 78.16.8. So 78.17. Gorilla. Not 14, 17. You were like way out. I don't know what math you're doing. Cool. Okay. So the thing is, are you going to get involved at some point on this pair? I'm just worried about buying it until we get a little lower, excuse me, on oil prices. And then I'd like to buy it. Catching the bid, DJ? Oil catching the bid? So there's our trade plan on oil. Can you guys see it? Here's the bottom. Here's the area in which to buy. And the target was 50. And then we said it would come down to 40. And of course, it's been doing that. Right? And then, is it really going to head down to here? I don't know. But we have an OPEC meeting this week or this month in September. And there's a lot of stuff going on behind the scenes right now. And like Iraq said, yeah, sure, they'll freeze. But you have to read into it. What did Iraq say 2 weeks ago? Iraq said they were going to jack up production. And now they say they want to freeze. They'll finally agree with OPEC to freeze. So what does that tell you? They, in fact, jacked up oil production like they said they would. And they're at the moment where they couldn't possibly produce any more oil. So yeah, now agree to a freeze. Well, that's BS, isn't it? Yeah, they can't produce anymore even if they wanted to. So yeah, sure. Right? So we agree not to produce more oil than we're already producing. Yeah, all right, great. That sounds good. So, anyways, I think we're going to find more opportunity for oil prices to come down for a while. But it's always hard to believe it's going to come down that far. Okay. So you have to decide how to buy or where the bottom is. And how do you decide that? Thank you. Price, candles, technical analysis. So you need to watch things like clusters. So like this week, you can see a weekly M1 and a monthly M3 clustered. The current bottom is basically M2. Okay, that's fine. So there's a cluster there, and all these things are going to be important, right? So what these charts tell me is that the weekly top is the central pivot point. Clearly an opportunity to sell, right? Actually, let me ask you, if you were a bear using weekly pivot points, what were you chanting all weekend? You were saying, right, that you were begging price to stay below this yellow zone, right? So moves like this are just incredibly predictable, right? And the target, because of that, is right here. The conservative target's going to be here. So let's breach 46 and go down to 45.50, right? Okay, fine. That's what's supposed to happen for the week. But what you need to do is keep paying attention until these things fail. So like that should come down like this, and then it should bounce up next week, and then it should come down, and let's just say new pivot points or something. But ignoring this 44 line, that's the monthly central. Tomorrow we'll get a new one. But what you want to look at is, well, what happens if we're simply looking at a Fibonacci retracement? Okay, this is about 50%, right? And now what if next week you see something like this? Well, now you're getting you're not getting lower lows, and your oscillator is going to roll over, and maybe we go from 45 to 55. That's plausible too. Right? That we're just playing the price levels. That's fine. Will it go down to 40? I don't know. But you know what? It could. I think there's a lot of oil. I don't think OPEC is in control as a cartel anymore. I think nobody's in control of the United States oil production. I think Venezuela, Iran, Iraq, Russia, probably Libya. I haven't looked at Libya in a while. They're producing as much oil as they possibly can. Absolutely as much. And we know last month, July, Saudi Arabia produced more oil in a month than they had ever. Saudi Arabia's never produced this much oil. Like all these countries are producing maximum amounts of oil because they're welfare states. So, wow. Well, because they're desperate for the hard currency. Right? So, anyways, yeah, oil can come down more. I'm just not saying it has to. Another way of saying it is this, what you're looking at now, this market, this whole entire market, is not necessarily fundamental anymore. It's not a function of pure supply and demand. There's a lot of other things going over. So like earlier, we predicted it would go from 40 to 50 and then 50 back down to 40. And it's pretty much done that since the 1st of August. Great. But that had nothing to do with supply and demand. We still have way too much supply. There's still not enough demand. And yet prices went from 40 to 50 and then from 50 to 40. And I predicted it, not because of some great fundamental analysis. It's just prices. So, I think we could do this for a while, but I don't think we're going to 70. And down, there's room for down. And I think the only way you can get a significant up is to have some amazing central banking policy change somewhere in the world that will create, or the assumption of increase in demand. But I'm not entirely sure what that's going to be. So until that happens, really, there's two things for you to choose from. And then I'll leave you with this thought. The yens are all going to crash back. So we're at 103.50 on the USD yen. Let's say that currency pair not only goes back to 100, but it actually goes down to 95 or 90. And if that's true, you need to start planning this now. Because we're at tops for the weekly, most of these yen pairs are at weekly pivot points. So that's a good place for it to start. Plus, new money is not likely to come in right before NFP, right? So whatever. So if it's going to drop, it's going to drop now. The yens. Not necessarily USD yen, but whatever. Okay. Great. So if you think the Japanese yen is going to get strong again, then you need to get going. Like it might be happening right this second. But you need to make a decision. You say, all right, these global macroeconomics, they're a mess. And I see more problems than I see solutions. So yen will get strong again. And people will bet against the Bank of Japan making a major announcement on the 21st of September. So right this second, like when you're staring at a double top on the pound yen at a reversal pivot point, yeah, maybe that's the beginning of the change in trend. You see what I mean? And you start trading that. Or if you believe we've started a new trend and that the yen pairs will weaken, and they have moved several hundred pips in the last 3-4 weeks, then this is a great opportunity at the end of the month for the yen to get strong again for the short term. So you need to buy these dips. Why is the end of the month important? Well, let's say you people track what your monthly performance is. Who would have a scenario like that where the end of month performance is important? Yeah, are you a foreign exchange trader trading other people's money? It's less so with foreign exchange traders, though. Do you know why? Why is it more so with like an equity trader than with a Forex trader? This is an advanced question. You get super extra bonus points for this one. Type of client. Why is it more important? Okay, let me restate it. At the end of the month, it's a good time to take profit so that you can report your successful trading for the month. Okay, right, monthly performance. Okay, great. Why is that more important to an equity trader than an FX trader? Bonuses. Well, everyone's got bonuses. Taxes. Well, taxes are different, but it won't have anything to do. Taxes wouldn't make an equity trader close his positions more than an FX trader because they're running firms. Why would an equity trader be more likely to close positions on the last day of the month than a foreign exchange trader? Why might the foreign exchange trader keep the trades open? Reporting, yes, but why would one close the trade and the other leave it open? Telling you, super advanced question. Liquidity, no carry trade. Well, yeah, balancing of the books, swaps, contract finishes. These are interesting answers. Wife needs new gift. Secretary needs new gift. Yeah. You ready? I thought someone would get it. Bonus? No, but they're both going to get bonuses or not get bonuses. Why would an equity trader close his position? And why would an FX trader perhaps not close his position? Miles, I have no idea. Good. Because they're lazy. No, come on. Interest? No. Something called mark to market. So, if you want to report successful trading as an equity trader, you don't get to count the trades that are open. Okay? So you bought Apple and you're up 5%. But you can't count the 5% because the trade is not marked to the current price, even though price has gone up. You don't get to count it until you close the trade and your account balance, your account balance has gone up 5%. In the foreign exchange market, we are marked to the market. So you could be open 10 trades and you'll notice that you're already paid the profit or you've already been reduced by the loss because we're cash traders, because we are completely liquid, right, Ryan? So like, let's say you held a penny stock and the thing is doubled. And now you want to cash out, but there's no one that wants to buy it at that high price. You see what I mean? That's why they don't market to the market, because we don't know what the market is for a stock. Maybe there's someone that's willing to pay $10,000 for an Apple share. Maybe there isn't. You see what I mean? So the equity guys, they don't mark to the market. You have to sell it before you get to count your profit, because it's not a profit until you sell it. The foreign exchange traders, though, we trade cash. Cash is liquid by definition. This is all cash. This is M1 cash. So your profits are in real time. And so if an equity trader wants to report a good trading month, he's got to get out at the end of the month and lock in those profits and say, see, boom, we made 5% for the month. It was a great month. The foreign exchange trader says, well, all my stops are at break even, all my trades are profitable, and I'm letting all of them run, and we recorded a 5% month. And we're still in all those positions. And I'm expecting maybe another 5% next month. So if you want to know more about that, that's why you can use Google. It's called mark to market. Right? It's a form of accounting. Your trades are marked to the market price. Mark to market. Or marked to market. Cool, huh? Boom. Trying to get you to think different. Open your mind. So hey, peace on earth. May the pips be with you. May your profits be above average. Oh, and by the way, maybe that's something you could you could talk about with your potential investors and say, well, why would you want to be in another long, short equity fund? In fact, if you look at the data, money's flowing out of the types of investment vehicles for many kinds of reasons. One of them, or let's say one advantage of investing into the foreign exchange market, is that we are mark to market. That we realize our profits and loss in real time. And I have the most amazing risk management strategy ever. Let me tell you all about it. So anyways, hey guys, peace on earth, may the pips be with you, may the profits be above average. I'll be here tomorrow. Will you be? Right on. Because I'm here every day for you, and I'm glad you show up. Otherwise, I'd have a very lonely life. So thank you for being on my team. I appreciate you and the effort that you're putting in every day. Assuming you're posting your trade plans on Forex.Today, Don't be lazy. Don't be a lurker. If you don't want to post a plan, at least leave feedback and ask questions. At least thank the people that do spend time posting their trade plans, right? Just out of a common courtesy, right? Thank you, Paulie. Not ready to post, but thank and like. Well, Paulie, how about even, leave a comment or even ask a question? As soon as you do that, the analyst is updated and they can respond. Open up a dialogue. Yeah, how do you get better if you don't practice, right? Challenge yourself, right? All right, see you guys tomorrow. Cheers.